Good morning, everyone. We would like to welcome you all to part 3 of our 3-part higher education webinar series. Hope you all have been able to join us for the first 2 parts. If you were not able to watch those live, we do have those on our website, so you all will be able to rewatch those at your convenience. This morning, we're going to talk about single audit. We're going to talk about some pitfalls, some frequently asked questions that we received, and we want to address those questions and go over those with you today. But first, let's do some introductions. My name is Brandon Harrison. I am one of the higher education partners here in the Southern California Rancho Cucamonga office.
And I'm Kristen Diggs. I'm a higher ed partner in our Boise, Idaho office.
And my name is Rachel Green. I am a senior manager, also in our assurance department for higher education, based out of our Rancho Cucamonga office. All right, so let's go over the agenda today. First, I just want to apologize, give everybody a fair warning that I am having some technical difficulties this morning. I'm in a hotel out in beautiful San Diego, my favorite place in the entire world, but I have been freezing this morning. So if that does happen, just quick apologies. So our agenda for today, we are going to talk about common pitfalls related to single audit. And specific to that, we are going to be talking about subrecipient monitoring, procurement, everyone's favorite, equipment and real property management, as well as some indirect costs, special tests and provisions. And lastly, we're going to go through some frequently asked questions that we get asked often from our clients, just about all different things, single audit related, federal program related. So I think it should be a really good topic today. So moving on. Subrecipient monitoring, this is everyone's favorite, right? So first of all, let's talk a little bit about how do I know if I'm a subrecipient or if I have a subrecipient. So what is a subaward definition? And that is an award that's provided to an entity for that particular entity to carry out the federal award at its location or its operations. A contractor, alternatively, is actually an entity, an organization, a person who provides property or services that are needed by the institution of higher education or organization for that matter to carry out the federal award and the necessary projects and program requirements of that federal award. So it's a little bit different. And the characteristics of a contractor are, do they provide goods and services that are within the normal course of their business or operations? So a good example here, let's just say Office Depot, right? Office Depot's whole operations, they operate in a competitive environment. They provide these goods and services really to any type of organization, not just an institution of higher education. But all they do is provide office supplies, right? So even if you're purchasing office supplies from Office Depot using federal grant award monies, that does not make Office Depot a subrecipient. So a little bit different there. So let's talk a little bit about the requirements if you do have subrecipients. So the very first thing you need to do is make sure that your agreement with that subrecipient has all of the applicable award information and all the requirements that are outlined under 2 CFR 200.331. And what are those required elements? Well, there are over 15 of them, so I won't read all of them to you guys. The ECFR has the whole list of the required elements for you guys to go to, and I think we link out to the ECFR later in our presentation. There's so much good information on there, but a couple of the key ones that I wanted to go over is first you have to identify the subrecipient's unique entity identifier number. And this is really important because that way in your award agreement, you have this information listed right up front. And this is really important when it comes to submitting the single audits at the end of the year and making sure that all of the information is commingling together in a way that's useful for the federal government to look and review the audits. Another important key piece of information is the subaward period of performance. Start and end date must be listed on there. There should be a description of the federal project award, and if there's any FFATA reporting requirements, the name of the federal awarding agency, so maybe Department of Education, Department of Labor, depending on what type of grant it is. There should be the pass-through the entity name that is listed there, as well as the contact information from the pass-through entity. So if I'm at University A, that would be me. If I'm the controller and I'm passing through to the local community college district, University A must be listed on there, as well as Rachel Green, controller. So that way there's no confusion about who to contact if there's any questions on that award. Another really important piece of information is the ALN, that's the assistance listing number. It was formerly called the CFDA, the Catalog of Federal Domestic Assistance. They changed that one on us in the last couple years. So we get some new acronyms there, identification of whether or not it's research and development, as well as the appropriate terms and conditions of closing out this subaward. Now, all these pieces of information are really important for the subrecipient to understand that, hey, I'm receiving a federal award. And with that federal award, there's always compliance requirements that are attached. And if you see an ALN or a CFDA number listed, that's a really good indication that this award did begin at a federal entity, and it has probably a list of compliance requirements that you are required to follow. So the next requirement, we must evaluate the risk of the subrecipient's noncompliance with the federal award. This could include the subrecipient's prior experience with the same or similar awards, the result of any previous audits, and if this subrecipient is required to receive a single audit, maybe they already get a single audit on their own. This is a great place to start. You want to do the risk assessment and make sure that if there's any new personnel, program directors, or let's say they just completely overhauled their ERP system, that's something else that you would want to consider in your risk assessment. You know, in the audit world, we're all about risk assessment. So we think that this part's really important to make sure that you're just taking a moment to think about the entity that you've passed these federal monies to. And you want to really consider, are they equipped to handle all of the compliance requirements? And if not, then we come to our next requirement, which would be consider imposing specific subaward conditions on the subrecipient. So the federal government does allow you as the pass-through entity to make additional compliance requirements based on that risk assessment. So going back to, if they have a substantially changed system, maybe that means there's additional monitoring or reconciliation that you want to require your subrecipient to do so that you as the pass-through entity feel really comfortable with the operations. The next requirement that we have here is to monitor the activities of the subrecipient. So subrecipient monitoring, that means we actually have to do some type of monitoring. And what is that exactly? So the monitoring process of the subrecipient must include reviewing financial and performance reports that you require them to submit, following up and ensuring that the subrecipient takes timely and appropriate action on any deficiencies that were noted as a result of either an audit, external audit, or maybe monitoring that you are doing and you're finding that they're not following the policies that you've requested them to implement. And then lastly, you issue a management decision on any applicable findings pertaining to that federal award that were provided to the subrecipient. So monitoring is a very important part of what you're going to be doing with your subrecipients. Some useful tools that the ECFR did put out to you would be providing the subrecipients with training and technical assistance. So maybe they just got a new system and it's a system that you are very familiar with. You might need to help provide some training on how to make sure that the grant management portion of that is working properly. You need to perform on-site reviews of the subrecipient program operations. So maybe that means that you need to go on-site and actually observe the subrecipient doing the program. And lastly, you are going to be arranging for agreed upon procedure engagements as you see necessary. And then lastly, internal controls. You're going to hear this over and over again in this presentation. I'm an auditor. I can't help myself. I always have to talk about internal controls. And so when you're thinking about internal controls over the subrecipient monitoring process, it's really the documentation of the risk assessment that you've performed. So I'm the program manager for this TRIO grant, let's just say, and I'm going to have to do the review and the risk assessment, which means maybe I've internally developed a checklist on my end as the pass-through entity that I go through to make sure that this subrecipient actually is an organization that we want to entrust with those federal monies. So I've done this review, this risk assessment. I've documented these are the reasons why I feel that this subrecipient should receive a portion of this grant. And then I'm going to have the controller review it, right? And I want the controller to also, based on my documentation, to be able to make the same judgments that I came to. And then lastly, we want to make sure that the pass-through entity has a mechanism in place to track any audit reports that are received and reviewed, and make sure that we just have documentation of all of those important internal controls. One quick thing I did want to note, just as a pass-through entity, I just wanted to make sure that you all know that, typically cash payments are done for subrecipients, as well as all subrecipients, whether you are a private, public, whatever type of organization you may be, they cannot be debarred. So you cannot be listed on the suspended and debarred listing. You cannot be a subrecipient. So just something important to note on subrecipient. And with that, I'm going to go ahead and pass it along. Oh, actually, we have polling question number 1. Go ahead, Mai. Sorry about that.
No, you're okay.
So with the rising risk in data security and requirements such as Gramm-Leach-Bliley Act, how interested are you guys in listening more about cybersecurity risk assessment, or maybe having a cybersecurity risk assessment done at your organization? This is something that we encounter all the time as cybersecurity breaches. We've had plenty of those. We've had some clients where their data is held ransom, which is never fun. Yeah, so we just want to know, we want to hear from you guys what your interest level is. So just take a couple minutes to go ahead and answer that polling question so you guys can all get CPE credit. How are we looking, Mai?
All right, we got a couple more that need to submit their answer, and we're set. Oh, we are at 90% now. We are good to continue.
Excellent. I will go ahead and advance the slide. Thank you.
All right. So I think I used short straw. So I get to talk to you guys about procurement. It is an area that we all love to hate. It is a necessary evil. So I'll kind of go through the requirements and what we're finding when we go through and we do audits over procurement. So procurement is still one of those areas where we're having issues and we're having findings in due to the complexity related to this area. One of the key areas where we are seeing findings is due to the procurement policy not being complete. So the uniform guidance goes through and it lays out specific items that are required to be included in the policy. On the slide, I've listed out the CFR. It starts with that one, and it goes basically to CFR 200.317 to 327. And so some of the key areas that are required to be included in there include a conflict of interest policy. You're required to talk about, hey, if they do not follow the conflict of interest policy, what the disciplinary action is for failure to adhere to it, a policy for avoiding acquisition of multiple items, policy for cost-effective purchasing. One thing that we have found with institutions is they may piggyback off of what the state did for the state procurement policy. The key thing with that is if you don't end up going through the procurement process yourself and you do follow that of the state, make sure you retain documentation showing that the state actually went through that procurement. So if it does get selected, you can show evidence that, hey, this is why we didn't follow the procurement policy on this one, because the state did already. And so we didn't feel necessary to do it again. Another item that's required to be included is a policy on awarding to responsible parties and contract oversight, a document retention policy, provisions to ensure that all solicitations incorporate clear and accurate descriptions of technical requirements and do not restrict competition. The procurement methods, which we've gone out and we've listed here on the different ones. We did get the sealed bids listed twice because that one's apparently important. Policy on doing business with disadvantaged business enterprise programs. Policy on recovered material if subject to EPA requirements. Policy on the contract price and types, bonding requirements, and then the contract provisions. We are finding that the main ones are typically included within the procurement policy. And so the main ones with which include like the dollar amount levels and all of that. Those are all addressed. It's a lot of the smaller ones that aren't addressed. It may not be direct and material overall to the procurement area, but it should still be included. With an institution, you guys also may be facing different procurement rules as it relates to local, state, and federal guidelines. And while it may be tempting to use the different policies based upon what the funding source is to pay for the particular items, what we've seen what works the most successfully is when there's one procurement policy for all. So what we would encourage you to do is look at what the most restrictive policy is, whether or not it's probably not going to be local, but whether or not it's state or federal, and then follow that policy and use that for all. So that way it doesn't lend itself to people getting mixed up and using the wrong procurement policies or going through and paying for items. The other thing is too that we found is if you are more vague in your policy when you're going through and laying that out, it also lends itself to potentially more issues, because then people decide by themselves how they're going to follow and interpret that policy. But if you're more specific on your policy, basically look at it as a guide. So this is how we're going to follow it, and this is how we're going to apply it for these particular items. And so that way it really does a nice job of laying it out, and there is no question of how to follow that particular aspect of the procurement policy. The other thing that kind of goes along with this that Rachel touched on during her subrecipient piece is suspension and debarment. So suspension and debarment is required for any contracts that you enter into that are 25,000 in the cumulative. So if you have multiple transactions that add up to $25,001, you need to make sure that you're taking a look at this. Just as a reminder, debarment is where there's a permanent ban on someone receiving or a vendor receiving federal funds, and then suspension is a temporary ban on receiving federal funds. One thing with this, there's 3 ways to go ahead and check and make sure that they're not suspended or debarred. One, you can get a certification from the entity. The other one is to independently check on sam.gov. Go through and on the contract, when you're signing a contract with a particular vendor, include this as a contract provision. The one thing that I will say that I've ran into in this area, and I have given findings on, is they may have gone in and checked suspension and debarment, but there was no evidence of it. And so if you're going in and checking it for these particular contracts, make sure you retain documentation to show that you've actually went in and checked it before entering into the contract. The other thing that we've seen the most successful is when there's some kind of checklist over procurement. So go through the different elements and make sure you include this on the checklist, and make sure it includes the check to make sure someone's not suspended or debarred. And then, like Rachel said, we're going to hound on internal controls. Make sure there's a review over this process. Make sure that there's evidence of that review. So some of the things that we found with COVID and the going to the remote environment and just people in different places and everything, is there's a lot of discussions. Maybe they took place over Teams, or they took place over the phone or something like that, saying, hey, it looks good, go ahead and proceed. But if there's no evidence of it, there's no way for someone to come in and verify that there was actually a review. And so then as auditors, we're kind of in the unfortunate position where we do have to give a finding because we can't prove that control was there. And so just provide evidence of that review when you're going through and doing it. Suspension and debarment is required anytime a new contract is entered into, or there any kind of contract amendments. So hopefully that kind of helps with procurement. And then if you have questions, feel free to reach out to your auditors. The other thing that I'm going to talk about is equipment and real property management. And the reason we wanted to talk about this is if you purchase any federal if you purchase any equipment or real property with federal funds, one of the things that we run into is there is a requirement, and you'll see this on the 3rd bullet, is you're required to do a physical inventory count at least every 2 years for these items. You're also required within the system to track these items separately. So you want to make sure you designate somewhere within the system that these are federal items. And the federal government within the uniform guidance has gone in and said, hey, we want to make sure within your system you're tracking these particular items. So it does go through and it lays out when you're tracking it to make sure, hey, these items are included. And that includes, an identifying number, so make sure you're tagging everything, the source of the item, federal or non-federal, the title holder, the acquisition date and costs. Another key one is the federal participation percentage and costs. So if you didn't purchase that particular item with 100% of federal funds, so maybe it was 20%, maybe it's 80%, you want to make sure that you're applying that proper percentage, because if you turn around and sell that item based upon the terms of the agreement, there may be money that's due back to the federal government. And so you want to make sure first you don't give them too much, but that calculation in general is done correctly. And so sometimes documentation gets lost. So if you're tracking that within the capital asset records, it's easy to see how much federal piece of it was. You also want to make sure that you're tracking where it's at, the condition, and then if you do dispose of it, what the disposal date is. And then again, can't harp enough on this, is make sure there's a review. Make sure there's a review over the inventory observation, so someone's signing off on it once it goes through. And if there's any equipment or property that's purchased, make sure someone's reviewing that, especially if you got disposals, if there's a federal piece due back, that is getting reviewed and it is done correctly. And with that, I'll turn it over to Brandon.
All right, thanks for sending them back. All right, so I'm going to go over indirect cost rates. And let's go through the requirement. The requirement is to use an approved negotiated indirect cost rate, or as stated in the grant awards. You can have a cost allocation plan, an indirect cost rate, or a mandated predetermined fixed rate. The key is that the cost allocation plan or the indirect cost rate has to be pre-approved by a federal awarding agency. What we see here many times is institutions are let their indirect cost rate or plan expire or lapse, and you're not able to charge indirect cost rates if your rate has lapsed. You'd have to go back and get it reapproved and get a new rate based off your actuals in that year. Very carefully, it's very important that you read the contract. Make sure you clearly understand what costs can be included in the base. Because we have to make sure that if the award says that it's at 8%, but your indirect cost rate could be 25, 40% or something like that, you're only going to be able to charge up to the 8% as awarded, as the grant award states. One of the other big things that we see is, so when you're using your negotiated indirect cost rate, you have to make sure that you're using the correct expenditures included in the base. So what we're saying here is that when you use the indirect cost rate and you allocate it across expenditures, if your indirect cost rate is based on salaries, you cannot charge it to all your total expenditures. So if you do charge it to your total expenditures, you will have unallowable costs and you will be actually overcharging the grant, and then you'll have to refund some of those dollars. So it's very important when you go through and you start charging indirect costs to federal programs that you verify that you're actually charging them to the correct base, and understanding what actually can you charge them to, and not just all the total expenditures. Sometimes indirect cost rates and plans, allocation plans are done 1 to 2 years in arrears. So when they're done 1 to 2 years in arrears, so what I'm saying here is if you are charging 2023 costs based off of estimates for 2021 actuals, you'll have to do a true up at the end to make sure that you're actually allocating correct costs for the current year. So it's very important when you go through this, you look through you have an internal control to make sure you review to ensure that your indirect cost rate has been approved. You make sure that you're actually charging it to the correct base to ensure that you're having allowable costs, because we never want to come in there and see that you're actually charging it to, say if you have $1 million in expenditures and you only have $150,000 in salaries, we want to ensure that you're only charging it to the $150,000 in salaries if that is what your indirect cost rate is based off of. So it's very important that you have internal controls over looking at this. Make sure you're reviewing your indirect cost rate for appropriateness, and make sure when you're charging it to the grant, you're having someone review and ensure that those expenditures are actually allowable expenditures for that program. I think I got the easy stick on the sections, so I think we're going to move on to the polling question. Maya, are you there? I will go through it and I will say, are you interested in learning more?
Sorry,
about the process?
I was on mute.
Oh, it's okay. Are you interested in learning more about the process for obtaining a negotiated indirect cost rate? It's very important that you get this pre-approved. So ensure that if you have one that's coming up pretty soon, that's going to lapse, you reach out and get a new pre-approved rate. Therefore, going forward, that you're able to charge the grants, and you don't want to miss out on these charges because there can be a substantial amount that you can use for indirect cost rate here. I think we're approaching 90%. Did we make it?
We have one more. All right, we are good to move forward.
All right.
Perfect. So now I am up. Hopefully everyone can hear me okay and I'm not frozen. So I am going to go ahead and talk to you guys about some special tests and provisions. And this is a good one because there really is no clear cut what are the special tests and provisions. They are absolutely 100% special and unique to each federal program. So where are you going to find that? Well, it's in the statutes that are that approved the funding at the federal level. They're in regulations. They're also in the provisions of your grant or contract agreement with the federal entity. So they are very special, and they could span the gamut of all different types of requirements that the federal entity wants you to do for this particular entity. So it's really important that you do understand the unique provisions and special laws that are surrounding the program that you're operating at your college, because there could be some special tests that are embedded in there, and you may not be aware of it if you're not very familiar with the requirements of the program. So it's kind of funny because a lot of the times we'll go out to do a federal program audit, and my auditors will ask, the entity, they'll say, okay, well, how did you comply with the special tests and provisions? And our clients, our institutions of higher education will say, well, what are you talking about? What are special tests and provisions? So in the compliance supplement that gets released every year, your program may or may not have a program specific compliance requirement that lists out everything that the auditor is referring to as a special test or provision. You probably know it just as a compliance requirement, and you know that you are required to do certain reporting. So it could be helpful to kind of bridge the gap if you do pull that compliance supplement, just so that you guys can be speaking the same language. So some really good examples of special tests and provisions. So the TRIO program, for example, the entity must provide some specific services for their talent search, Upward Bound, and McNair programs. That each individual participant should have the following services or some services related to academic tutoring, advising, and assistance in applying for secondary and post-secondary course selections, assistance in preparing for college exams. So there's specific services that we as the auditors have identified based on the compliance supplement as a specific service, special test and provision, but you just know it as, hey, this is how we operate our talent search program. We just know that this is a requirement, and that's what we do based on our program guidelines. Another one that's popular in the TRIO cluster is the Upward Bound. There's certain core curriculum requirements. So core curriculum instruction must be provided by the educational entity in mathematics, pre-calculus, laboratory sciences, different areas. Again, you guys just know this as these are how I operate my TRIO program, but your auditors may be referring to it as a special test or provision. One of the other popular ones that you'll see, actually not just in TRIO, you'll see it across all different federal programs specific to the Department of Education, is minimization of the duplication of efforts. And really this requirement was put in place not just for TRIO, Title I we see it, special education funds we see it a lot. And the reason that you're going to want to minimize these duplication of efforts is so that you can get more bang for your buck, right? So the federal entity has given you all of these monies to help run these programs on your campus, but we do know that a lot of these programs kind of can run in tandem with each other, or they're very similar, or they're complementary to each other. TRIO and Gear Up is a great example. Both of those programs run in tandem, and what the federal government wants to make sure is that you're aligning your programs together to help streamline the process and make sure that you are using those federal dollars most effectively most effectively and efficiently, right? So as to not waste those very precious grant monies. Another area, another federal grant that has a very, very long list of special tests and provisions is the Student Financial Assistance Cluster. So if your organization gives out federal student aid, Pell Grants, direct loans, any of those FSEOG dollars. So long list of special tests and provisions for your student financial aid cluster. A really popular one where unfortunately we see a lot of findings. I used to write a lot of findings in this area, still do write findings in this area, is the return to Title IV compliance requirement. Now, why does this one get so many findings? Well, it is a very finicky, it's a very finicky compliance requirement because there's a lot of timing that's involved. There's a bunch of different dates that you have to pick the right one. So it's really knowing the specific requirements. And if you're fortunate, you have an ERP or a student system that can help do the calculation for you, and you can set up the parameters so that it captures it properly. But if not, you may be doing these calculations using that old Department of Ed worksheet that's been listed out there. And so the incorrect withdrawal date in performing the calculations, that's one that we see where this one we just get hiccups on. Funds are not returned within the timely 45-day requirement. That's another one where, you know, unfortunately, it's one of those things that you have 45 days and that's the requirement. And if you are at day 46, unfortunately, that one day did not do you any favors and you get a finding for that. So lastly, another area that we see return to Title IV is the funds not being returned in the proper order. So Department of Ed has dictated what order they want the funds returned in. So making sure that your financial aid department is really familiar with all of these intricacies and requirements of the federal program. Student financial aid is just such a complex, robust program. So knowing the intricacies of that program is so important. Another one where we see a lot of findings in, unfortunately, is student status changes. So we see this a lot in our community college clients. So those students tend to change their enrollment status quite frequently. They'll start out at full time, and then, you know, as the semester goes along or the term goes along, they drop down to 3/4 time, and then it drops down to half time. So each time that status changes, NSLDS wants to know about it, right? So they want to know when the enrollment effective date was. They want that certification date. Again, here's that timely requirement within 60 days. So we are seeing our clients really having to improve on this process to make sure that it's happening frequently within the timely requirement, as well as reporting all of the necessary information every single time that student status changes. Unfortunately, depending on what type of organization you are, like I said, our community colleges, this happens quite frequently. So this is another area where the compliance requirements are just very heavy. The special tests are very heavy. That's why student financial aid, they do tons of seminars and conferences. Washington, D.C. pushes out a lot of information for the student financial aid cluster just because, like I said, it is such a robust program with all different kinds of compliance requirements, specifically in the special tests arena. And then, as I mentioned before, internal controls, even the special tests and provisions, there also has to be internal controls over every one of these compliance requirements. So again, that's the review of the return of Title IV calculation. That's somebody monitoring the student status changes, reporting to NSLDS and making sure that it's done timely and accurately. Internal controls, they're so important. We definitely need to make sure that those are in place. And so with that, Brandon, I think you are going to talk about the CFA.
I am. So after all this exciting testing that we go through as auditors, we have to bring it all together. And now we have to look at the schedule of expenditures of federal awards. So I'm going to go over some of the required elements here just to ensure that everyone knows that the requirements are. It's always required that you have the name of every single federal program that you have received dollars from. So it's really important that we see, the thing that we see here is completeness. We have to ensure that you have all the federal expenditures that you have received. So sometimes Monies are commingled with state programs. They're buried in your local revenue account sometimes. It's just very important that you understand all the federal dollars you have here, because we do have to report that as an expenditure on the CFA. So you have to always have the name of the program, and then now it's called the Federal Assistance Listing Number. That's what we used to call the old CFDA number. That is always a requirement. Your expenditures are going to be on there. The expenditures are on the accrual basis. Now, when you have expenditures to subrecipients now are going to be on the cash basis, and they need to be clearly lined up in a different column, and they need to be broken out and shown on your CFA. So it's very important that you actively monitor and ensure that you have a completeness of all subrecipients that you provide money to as well. Some of the things that are missed sometimes is when the program is not a direct award. So if it's not coming directly from the Department of Education, the Department of Labor, you have to have the pass-through entity, the name of that. So if you're getting it from another community college or another entity that it was not directly, or a state agency instead of the federal government, you have to clearly document who the awarding agency is, and you have to have a pass-through entity identifying number as well. So it could be a grant number there. It could be some number that specifically relates to the grant that you're receiving from that pass-through entity. So it's very important that you have all of those elements in there. One of the other things is when you're preparing the CFA is that whenever you have a cluster, so the student financial assistance is one of the main clusters that we have there, you have to ensure that you subtotal these as one program. The federal government looks at clusters as one program, so you have to make sure you subtotal those numbers and show what the total expenditure is by the cluster and not just by the individual program. One of the tricky things about this is that if you have a program that has the same federal assistance listing number but not part of a cluster, you also have to subtotal those dollars in there as well and show that those are basically looked at as one program. It's very important that we get these numbers right, because we have to bring all this information together. And as you know, many of you know that we have to submit this to the SFSIC form, the Federal Clearinghouse. So the accuracy of these numbers are very important. So it's bringing all this testing comes together, and then reporting these dollars is very important. So it's important that you have internal controls over your schedule of federal awards. You have to have someone ensuring completeness. So that would be someone looking through the general ledger, agreeing all the federal expenditures to the general ledger, having proper support that ties out. You can easily hand it to your auditor, show these are the total federal dollars we have. Matching your revenue and expenditures are very important, because if we see somewhere where there's larger numbers of federal revenues and then you only have a small number of expenditures, we look at that and see where's the reconciliation there. Is there some type of deferral that needs to be set up, or receivable needs to be set up, but we need to make sure that we have the correct expenditures on here, because reporting to the federal agency is very important, because they want to gather data and determine how much they're going to fund in the future years. So matching the revenue and expenditures is probably one of the key internal controls. Reviewing the CFA to ensure all of the elements that we just went through, to ensure that you have all that information, you're able to provide it, because this is one of the forms that has to be prepared by the client. Us as auditors can assist, but it really needs to be performed and reviewed and prepared by the auditee. From there, I do want to go on to the next slide, which is going to be going through some things that we have to include into the report. We have to include the summary schedule of prior audit findings, and there's some elements that have to be included here. You have to include what the finding was, and then you actually have to include what was the initial year that the finding was put into the report. So it's important that you keep track of your prior year audit findings. You have to put what the status of the finding is as well. So if it's in the 2022 year and then we're issuing the 2023 report, we have to know if it's implemented or not implemented. And if it's not implemented, we have to refer to what finding in the current year report is noting that this finding is still a concurrent finding as well. So it's very important that you have some elements in here, that you're going to have the finding, you're going to have the federal award agency here. You're going to have the program CFDA number, which is the federal assistant listing number. So there's certain elements within the prior year audit findings that you have to have into the report to show that you're maintaining it. You're basically having a corrective action plan to address these findings, and you are aware that these findings are ongoing findings as well, or if you implement it. So I always say it's very important. whenever you receive a finding, it's not the end of the world, but it's very important that you correct those findings. So whenever I present to a board, I always like to go over prior year findings that are implemented to show that management, yes, we may have found something in the current year, but in the next year that they fix these and they ensure that they're in compliance this year. You never want to show repeat findings consistently. So it's very important that you always look at the prior year audit findings and show implementation of those if they are implemented. Now, corrective action plan is a little different than what we normally see in your audit reports, where you think of, well, I have an audit finding, so therefore the summary of schedule of question costs is going to go in there. This is actually something separate. This needs to be included into the audit package that is uploaded to the clearinghouse. So it's a separate letter, it's a separate report that's going to be on the client's letterhead. It's going to document the current year finding. It's going to document the corrective action plan as well. So what is the institution going to do? What is the institution going to do to implement this finding? So it's very important that you get kind of detail so everyone understands what the plan is to make sure that there's not going to be a repeat finding. You actually have to put the responsible individual's name in there as well, and their title as well. So you have to put their title and their name. So you have to put someone who is going to be responsible for overseeing the implementation of this finding. You actually have to put there if it was a prior year finding, if it was not implemented from the prior year. So it's very important that you have to really ensure that you have someone that is taking responsibility to ensure that the corrective action plan is going to be implemented. This cannot be included in the schedule of audit findings, as I noted. This is going to be a separate little letter that we have to include into the uploading to the clearinghouse. This must be prepared for all federal findings, and if you have any yellow book findings, which is going to be some financial statement type finding there as well. So if you have a finding there, this needs to be included and prepared by the auditor and the auditee, and ensure that it's being uploaded to the federal clearinghouse. So that way the federal awarding agency understands the plan of attack to implement the finding. From there, I think I'm turning, we are actually going to switch gears here now. We're actually going to move on. There's a lot of information that we've brought into this presentation, but what we did is we reached out to some individuals and some contacts that we had, and we wanted to get some frequently asked questions. So we were able to get some frequently asked questions, and hopefully we can address each one of these, and we're going to go one by one and address some of the ones that that were really significant and prevalent that we've seen through higher education institutions. The first one is, what is best practices for time and effort reporting for hourly employees or not 100% funded FTEs?
So I'll go ahead and take this one. So really, Brandon, the best way is to establish some form of tracking the time that was actually spent working on the grant. So there needs to be a system that's established that will include a review by somebody else. So again, we're talking about those internal controls. So that might be a program director. Let's say I work on the TRIO grant, and I also work for fiscal services. That's a weird situation, but let's just say that that's what I do. I'm, 50% funded through just general accounting and 50% funded through the TRIO program. Well, the TRIO program director should be overseeing my TRIO work, which would mean that the program director would know how much time I spent working on TRIO activities versus just general accounting. So that person needs to be involved in approving and reviewing my time on, a weekly, daily, however frequently the organization takes time. Should be reviewing my time spent on the grant. So there needs to be some sort of mechanism, policy, procedure in place for tracking these, whether that's a time card or whether it's done electronically in the system based on time and effort. Maybe the system tracks how I actually do my time. So there has to be some sort of mechanism in place to track my time.
Perfect. That kind of leads into our next question as well. What is the difference between time and attendance and time and effort? Am I allowed to charge the grant based on budgeted percentage of time?
All right, I'll take that one. So essentially, they're both ways of being able to track the time that you are spending on a grant. With that, you are allowed to track it on a budget basis. However, you need to do some kind of true up. So if whatever the shorter period is, if it's the end of the grant, if it's the end of the fiscal year, there needs to be some kind of review to say, okay, I budgeted 40% of this individual's time to be spent on this grant. When I went through and reconciled their timesheets for the year, they actually spent 50% of their time. So I can charge an additional 10% to the grant, or say it's less. There needs to be some kind of true up and reconciliation at the end of it.
Perfect. Let's see, what do we have? If I have student support monies remaining that must be spent by June 30th, 2023, can I pass the balance through to our college foundation to make the awards and disbursement students at a later date?
So on this one, we're assuming that these are HERF student support monies that got passed through as a result of COVID. So in which case, if this question was related to the HERF, which is for our institutions of higher education, the answer to this is no. This would not be allowed. So the terms of the grant require that the money go directly to the students. So those student support monies were really specific to giving emergency grants to students. So those monies must be given directly to the students, or posted to the student's account. So if approved, the student could say, hey, you can use my emergency grant to discharge my debt, but that had to be specifically approved by the student. This grant is also a reimbursement grant, which means that the expenditure should be incurred prior to the submission for reimbursement. So just keep that in mind as well.
Perfect. Eide gave a blanket extension on our grants until June 30th, 2023. Do we still have the 120-day closeout period to finalize the accounting and reporting for our HERF grants?
So I'll take this one. So under the uniform guidance, so if you look at 2 CFR 200.344, it goes through and it does allow for the additional 120-day liquidation phase. So you do have access to draw down your funds after that June 30th, 2023 date, basically to get everything wrapped up. So to make sure you've captured all the applicable costs to be able to charge that grant, but you do have to spend them before the June 30th, 2023 date.
All right. That actually brings us to our polling question number 3. For purposes of implementing GASB 96 subscription-based information technology arrangements, about how many subscriptions does your organization have that fall within the scope of this statement? Or so hopefully everyone knows that GASB 96 is coming. I mean, it is here now. We just went through GASB 87 with leases, and that was a trial and tribulation type situation. But now we are on GASB 96, and we anticipate this being actually even a larger implementation than the lease standards, because there's so many different subscription-based information technology arrangements out there. So many different, at one institution can have up to 15 to 20, I mean, even more than that. These are just different systems that you could have. It's going to be a challenge for all of us from the audit side, from the institution side. So we really anticipate this one being another challenge. GASB just keeps throwing some curveballs at us each year. As soon as we think that we're going to get over the hump, they give us a new one that they want to implement. Maya, how are we at?
All right, we're good. We can move forward.
All right. Everyone's getting in pretty quickly. Thank you. Let's move on to some more questions. All right. A department has created an invoice to send to the granting agency. Upon review by fiscal services, we check the general ledger to verify amounts claimed for reimbursement. However, the general ledger balance was 0. Is it still appropriate to send this invoice?
I will take this one. And the answer to that is if it's a reimbursement. So the question specifically was amounts claimed for reimbursement. If this is a reimbursement grant and the general ledger says 0, the answer to this is no. It sounds like there were not any expenditures incurred, so it would definitely not be appropriate to send a request for reimbursement when there are no expenses that were incurred, at least according to the general ledger. And so that system of record, again, is very important, that we have records that support any type of expense that we are claiming for reimbursement. There needs to be record of that in our general ledger system.
Right. What are the best practices for working with a department that has several federal, state, and local grants, donations that are braided together to support the activities of the department?
All right, so I'll take this one. The best practice on this one is, if you can at all possible, to set your system up. Hopefully it doesn't blow your system up and create your trial balance to, just be huge. But if you can track it within the system. So if you have it broken out within the department, but then you have the expenditures that are lined up between cost centers, locations, something like that, some kind of designation with the account string. So you can line up the expenses and then how the revenue that's associated with it. The other key with this is to make sure that you're not double dipping. So you're not using the same expenditure to you're using state money and federal money, or federal money and local money to help pay for something. So if you can somehow break it out within the system, you can track it and then pull it and make sure that you are you're tracking stuff appropriately. So, and you're not double dipping.
All right. The college was awarded a grant which reimburses 50% of the expenses made toward the agreed upon activity. For example, the college spends $100 on student support and grant gives the college $50 in return. The expense can be charged to any department within the college. What are the best practices for tracking the funds expended and time and effort reports as match for this grant?
I'll go ahead and take this one. So, Brandon, this kind of to piggyback off what Kristen was just talking about, and making sure that your ERP system hopefully can track these activities in a way within the general ledger that is meaningful. So, for example, you would want to have those allowable expenses tracked in some type of separate cost center, a project code, program code, somehow within the ERP system to track that, hey, this is actually an allowable expense that can go towards this matching portion of the grant. So that way, when you do the reconciliation to identify the specific activities that are allowable for reimbursement under the matching of the grant, that you can quickly and easily pull a report by cost center, by program code to say, hey, these were the activities that we performed that are eligible for match. And there we go. So we've set up the ERP system to kind of help do that for us.
I think we are trying to get as many polling questions in here so everyone gets their CPE. So we'll go ahead and launch the next polling question. That way everyone gets the full CPE. With respect to an internal audit function, at your organization, we have an in-house one. Do you have an outsourced one? Or you do not have an internal audit function? So as we're over the course of the last few years, we've seen the internal audit function becoming so much more prevalent within higher education institutions, and seeing that function has just really been beneficial for many organizations. We see a lot of institutions going out there to either outsource their internal audit function, or they're hiring someone internally to perform the internal audit functions as well. So we're seeing this become more prevalent. So we just were interested to see where's everyone at? Where's everyone in the higher institution world with having an internal audit function there?
Okay, we just need a few more.
Just a few more there.
Perfect. And with this being the actual last one, we may not hit that 90, and that's perfectly fine for this one.
Okay, perfect. No problem. Are we good to move on? Moving.
We'll get to 80.
All right, then we'll move.
This actually, Brandon, just to kind of put it out there, this actually is a position that a lot of our colleges here in California, they have the position approved and kind of funded. But a lot of the time lately, they are having a hard time filling that position with somebody. So I actually just met with one of my clients yesterday to kind of talk about, what types of things should be included, skills that you would want to see for your internal audit position. So we were kind of able to go through, just the different types of things that you would want to see in your internal auditor.
Awesome. I think these are our last two questions. So let's jump into these ones real fast. If I have a negotiated indirect cost rate that is higher than the awarding agency's rate stipulated in the grant agreement. Can I use my higher rate?
All right, so I'll take this one. So basically the grant agreement is king. You need to make sure that you're following the grant agreement. So even if you have a negotiated indirect cost rate, if that indirect cost rate that's listed out in the grant agreement is lower, you have to go off of that. The grant agreement, for you to be able to use your indirect cost rate, needs to explicitly state you can use your negotiated indirect cost rate. And then I did see a question in the chat because it kind of goes along the same lines. I'll kind of go through and answer that. And it says, can you use a different base for indirect costs as long as it's less than if you were using the base and negotiated rate? What I would say to this is use the base that's laid out in the grant agreement. Again, the grant agreement is going to be king. You need to make sure you're following that. If you do not follow it and you do get lucky and the indirect dollar amount that you go through and you calculate is done correctly, and that amount comes in less than what you normally would have been, great, but you should still use the base that's designated in the grant agreement, because on the flip side of it, if you go through and you calculate it with a correct base and it comes in lower, then you could potentially have a finding related to that.
Perfect. Glad you grabbed that question. All right, I think this is our last frequently asked question. I received a pass-through grant from a local city foundation. The agreement did not specifically say that we are a sub-award. How can I verify this? Rich, I think you're the last one, right?
Yeah, so I mean, this kind of goes along with my part of the subrecipient monitoring portion. So really, you need to go back to that. Again, the grant agreement is king, right? So that if you have a subrecipient contract with another entity, it should specifically state you are a subrecipient of this particular federal program. Here's the ALN number. It will go through all of those over 15 required elements of the grant agreement. And you know what, if you are still unsure, make sure that you contact the organization who gave you those monies and just continue to ask those questions. Where did these dollars come from? Where did they originate from? And just continuing to ask those questions, because it's so important that you are aware if there are compliance requirements. As a subrecipient, you are still responsible for compliance with all those requirements. So just make sure that you are doing your due diligence and making sure that you really understand the source of the funding there. And with that, I think that's the end of our frequently asked questions. We do have some resources here. The compliance supplement, they do release a new one every single year. That ECFR that I had mentioned during my presentation, this one's really helpful. I look at this all the time, actually. And we also do have some articles that we've written here, common single audit findings and remediation strategies for you guys. And with that, I think we will see if we have just 1 minute for any questions. I did see there are some questions in the chat that I think if we don't get an opportunity
Rachel, I think we only have one, actually. And maybe we can answer it as a group, because Kristen answered the first one. I think we have about 1 more minute to try to get through this one. So I will answer it after real quick. Can you talk to how to handle an annual maintenance cost for a large ERP or payroll procurement? We changed payroll providers last year and it was a major project. How often do we need to put something like this out to bid? Same for liability insurance. Any thoughts on that one? Kristen?
I mean, it's always good. It would always be good to have to check and make sure that you're still getting the best price and you're still getting the, the best bang for your buck with it. I would do it on a rotation and just check it. You may not go with the low cost provider on it when you go out and you spot check it, but if they're still doing a good job and as long as you provide justification of that, you should be okay. The biggest thing is documenting why you went with it, so you're still following procurement policies.
So I do not see any more questions in the chat room, and we are right at 1 hour. So we just wanted to really thank you all, everyone, for your attendance and listening to us. I know we gave you a lot of information. We tried to get through as quickly as possible, but we tried to hit some real key points with the pitfalls and really hit some of the frequently asked questions that we received. Please reach out to Kristen, myself, or Rachel if you have any more questions. This webinar will be posted on our website in the future, so please look out for that, and please look out for any other future webinars coming from us. But we want to thank you all. Good luck in this fiscal year, and have a great day. Thank you all.